Hi, I'm Larry Dixon, Senior Automotive Analyst at NADA Used Car Guide with this month's market update. New and used auto demand slowed noticeably at the beginning of October as the two-week-long federal government shutdown that occurred over the first half of the month dampened consumer outlook on the direction of the economy. Even though the end of the impasse at the month's midpoint led to a bounce in auto activity, the crisis-fueled drop-off in consumer confidence was enough to ding both new vehicle sales and used price results for the month. Starting with new vehicle sales, October's seasonally adjusted annual rate of 15.15 million units was not only lower than September's rate of 15.2 million, but it was also the second lowest figure recorded this year, coming in just ahead of April's figure of 14.8 million units. Although the SAAR leveled off in October, the month's total sales figure of 1.2 million units was a 10.5% improvement over October 2012's performance. This pushed year-to-date sales to 12.9 million units, which is just over an 8% increase versus last year's 10-month total. Lower gasoline prices and hot products saw new truck deliveries grow by over 14% compared to last year, and year-to-date, sales for trucks in general have improved by a solid 11%. As for cars, sales grew by nearly 7% in October, thereby pushing year-to-date growth to 5.4%, or less than half the rise recorded for trucks. October's month-end inventory stood at 76 days of supply, up 3 days from last year's figure of 73. More significantly, from a used price perspective, incentive spending was 12% higher compared to last year, and the month marked the 9th in a row in which manufacturers increased discounts. On the used side of the market, prices of units up to 8 years in age fell by 3.5% in October. This was both slightly more than what NADA had predicted prior to the start of the month, and it was 0.6 of a point steeper than the 2.9% drop recorded last year. October's softness dropped NADA's seasonally adjusted used vehicle price index to 123.8, down 1 point from September's figure of 124.8. Year-to-date, however, prices remain 0.5% higher than they were through October last year. Across segments, mid-size van depreciation was especially severe as prices fell by a significant 4.7%. The segment's acute decline can be attributed to its substantial rental fleet exposure and the fact that rental companies remarket large quantities of similarly equipped units at auction over a compressed period of time. Price movement for other car segments followed a pattern similar to what's been seen over the last few months, with a large decline of 3.6% being recorded for compact car, mid-size car, and luxury car segments. Truck prices continue to fall less steeply than car prices. However, the respective 2.3% and 2.8% drops in large pickup and SUV prices was the highest recorded since May 2011. Looking ahead through December, although depreciation in October was a bit more severe than expected, the difference in expected versus actual movement was more a short-term function of the government's closure rather than deteriorating market fundamentals. And without the contrived hiatus, it's likely that depreciation would have been right in line with results recorded back in 2011 and 12. Considering this, as well as the absence of any looming governmental crisis, there's little to suggest that depreciation over the final 2 months of the year will materially deviate from recent seasonal trends. Certain economic data, particularly tepid job growth and lower consumer confidence, do provide concern that consumer demand, and thus used vehicle prices, could take a steeper than expected downward turn. However, it's believed that these negatives will continue to be counterbalanced by falling gasoline prices and a prevailing highly favorable credit environment. In addition, recent history has shown that a steep drop in consumer confidence doesn't necessarily portend a sharp decline in used vehicle prices. For example, confidence tumbled at the beginning of 2013 due to the fiscal cliff saga and the expiration of the payroll tax holiday, but a more muted reaction was observed in used price movement. Taken as a collective, NADA expects that used prices will fall by an average of approximately 1.9% over the course of the next 2 months, which is an estimate unchanged from last month's forecast. While decidedly higher than 2012's Superstorm Sandy influenced decline of 0.9%, this year's forecast is just slightly higher than the 1.5% decline recorded for the period back in 2011. As the seasonal norm, depreciation is expected to progressively improve as we move through November and into the start of 2014. October's result, along with NADA's prediction for the remainder of the year, would see used vehicle prices finished 2013 0.3 to 0.8% higher than 2012's record level. For additional market insight, please download November's edition of Guidelines. Thanks for watching.